Hi, I'm Kate Miller and welcome to Property Focus. Making headlines this week, new consumer credit laws place a question mark on borrowing options for older investors, and a new report reveals poor land supply is pushing up Australian house prices. But first to our lead story. The property market has kicked off the new year with a slow start, with the first round of official auction clearance rates revealing the recent spate of natural disasters has taken a hit on buyer confidence. Just 48% of properties cleared at auction in Sydney over the weekend, significantly lower than the 68% achieved for the same time last year. The story was much the same in both Melbourne and Brisbane. Andrew Wilson, chief economist at Australian Property Monitors, told Property Focus he expected this trend to continue in the weeks ahead.
I think we'll see the same story. We're getting higher numbers through. Melbourne's got some large numbers of stock coming through, of property coming through for auction. But I think that there's still a wait-and-see attitude on behalf of buyers when momentum swings as it has done, that it does take a little while for momentum to shift back, which we do anticipate will occur, particularly in Sydney, by the middle of the year. Melbourne might be a little slower.
Concern that the National Consumer Credit Protection Act will adversely impact older borrowers has been quashed by a leading legal figure. Remax Western Australia Managing Director Jeff Baldwin said last week that the new legislation effectively discriminated against older borrowers, as it requires them to prove they can repay a loan in full by retirement. But Jon Denvoan, partner at Gadens Lawyers, said the legislation had been misinterpreted and older investors should not be alarmed.
It can't mean what some people are thinking, namely that people over 35 can't borrow a housing loan. Just think how many buyers that would disqualify. There's a whole lot of old farts like me around who still need to borrow to buy a little meagre house to live in. So the legislation's been misinterpreted when people say that you have to be able to repay the loan before you stop working. Now, we all know that the retirement age may be moving out, but in relation to any particular borrower, you've got no idea when they're going to retire. So how can you say that a person's going to stop working when they're 55, 65 or 75?
And meanwhile, a new report has confirmed that the growing gap between Australian land supply and demand is crippling housing affordability. The Urban Development Institute of Australia found that Sydney faces the worst land supply problem in the country, followed by Brisbane and Perth. The Institute's national president Peter Sherry said the report painted a concerning picture for policymakers as well as new property buyers looking to enter the market. And that's what's making news this week. Thanks for joining us. I'm Kate Miller.